Welcome everyone to today's webinar, Survive Then Thrive, Financial Strategies to Help ASCs Navigate Uncertain Times. I'm Alan Conlon with Becker's Healthcare. We'll begin today's webinar with a presentation and we'll have time at the end of the hour for a question and answer session. You can submit any questions you have throughout the webinar by typing them into the Q&A box you see on your screen. We look forward to hearing your questions. Today's session is being recorded and will be available after the event. You can use the same link you used to log into today's webinar to access the recording. At this time, it is now my pleasure to start today's webinar by introducing our presenters. Nader Sami is the Chief Executive Officer of National Medical Billing Services. The CEO, Nader leads the strategic direction with a strong emphasis on exceptional client services, lean and efficient processes, cutting-edge technologies, and insightful analytics. Nader was also the co-founder and president of Ajuba International, a leading healthcare revenue cycle management company that grew to more than 2,500 employees in 6 years before successfully exiting. Nader was also an investment banker at UBS in New York and Merrill Lynch in San Francisco, and a corporate finance attorney at Dykema Gossett. Matt Little-Fellner is the Senior Vice President of Finance at National Medical Billing Services. As Senior Vice President of Finance, Matt is responsible for financial planning and analysis, forecasting, budgeting, and developing internal controls for the company. Matt is a certified public accountant, a controller at Doherty Business Solutions, and has a BBA in accounting from Southeast Missouri State University. At this time, I'm pleased to turn the floor over to Nader to begin today's presentation.
Great, Alan, thank you so much. Matt and I are really excited to be here today to talk about the challenging times going on in the surgery center market and discuss strategies to really manage through that. And so from an agenda standpoint, we're going to cover the impact that COVID has had on ASCs, and it's been significant over the last 4 months, the reopening challenges facing centers and the impact it's having on the businesses. Then we're going to dive into some depth on financial management strategies to help you manage through these times. And then we're going to finish with all of that said, what are the trends that we're looking at from an ASC standpoint, from a business standpoint, from a growth standpoint, from a profitability standpoint, post-COVID-19, and discuss possible ways to continue building and growing your surgery center as we get to the other side of this crisis. So, as I guess probably everyone on this call knows, there's been a dramatic impact on ASC volumes, and I think this chart really tells the story. So, as we were looking at it from a national standpoint, and one of the things, just kind of big picture, that's important to understand is that we have about 300 surgery centers as clients across the country. So we have a pretty good data set and a pretty good feel for what's happening on a national level. And so as we look at on a national level, January and February, surgery centers were really building. They were growing. The volume was great. You know, some of the bigger ticket items had been moving to centers. So they were really quite healthy. And then obviously COVID hit and it was falling off a cliff. So you went through about mid-March where everyone was again at full or higher than full historical volumes. And by, like I said, about March 15th, centers started to drop one by one by one. So over the course of about a week, roughly 70 to 75% of centers were shut down, and the other completely shut down. The other 25% or so were dramatically scaled back, just handling urgent surgery. So we saw different states, different surgery centers handle it differently with respect to, like I said, a peer shutdown to a, scaled back team, staff, etc. Lots of challenges with respect to how they're managing it, which we're going to talk about from a financial standpoint. But, that last 2 weeks of March and then the first week, second week, third week of April, dramatic. People were down to roughly, again, on a national level, roughly 15% of volume. So if you look at April, that was certainly the bottom of this, where across the country, about 20% of normal volumes were hit. And as you got to the very first week of May, as people got to that reopening standpoint and mindset, you sort of started May with about 35% of volumes, and it grew next week to about 45 to 50, and then it kind of about 10 percentage points each week through the end of May, where you ended up at close to 70% on a run rate basis for May. And then June has been pretty strong, where you've got a combination of patients just generally coming back. There's a backlog of patients, et cetera. Still a little bit of some patients hesitant to come in, scheduling issues, people taking the COVID test and not passing it, negative COVID tests, or alternatively just a problem to kind of go through all that process. So roughly June as a month is going to look like about 90% of volumes, and our projected, from what we're seeing, assuming there's not a major setback anywhere, is that by July volumes should be back to kind of a normal state. So hopefully this is kind of helpful. I know a lot of centers were wondering, are they in this, where do they stand in the equation? Are they further ahead, further behind than others? And this gives an average of what we were seeing across the country. So with that, as we got to that late April, early May standpoint, and centers were looking to reopen, obviously there were a lot of plans put together, requirements that you need to meet to be able to reopen. And we've looked at a lot of these plans, and we've seen some that had a 250-step checklist process to go through before they could reopen. So a lot of time and effort, a lot of planning involved in getting yourself to that point of reopening. And those they kind of fell into broad buckets of the CDC having expanded guidelines for sanitation, the screening protocols for staff and patients, the social distancing requirements were making it challenging for when patients having to be dropped off and to have people come in with them, the visitor flow in general. And then, as I mentioned, the COVID testing, certainly an impact here. So the fundamental impact on here is, one, there's a lot of work to get back to normal. I think the centers that stayed partially open had a little bit easier time of going through this than ones that had shut down completely. But regardless, it was a lot of work and additional work. And as we've come back, and it's, I think, getting better now, but it definitely had an impact on productivity, where the number of patients that you can see in a given day is less. And so most centers, to manage that and manage the backlog and be able to address taking care of their patients who had delayed the much needed medical care, we've seen a lot of extended hours during the week, and we've seen a lot of extended days. If it was a 3 or 4 day a week center, they're going to 5 days, some people going weekends, and almost everyone at least adding hours to make that up. So that kind of sets the stage for, look, we know we've gone through a tough stretch here. We're coming out of it, as we discussed in the volumes, and getting to a better place now. And so now we want to dive into really some strategies from a financial management standpoint that could have been employed during this time frame and can absolutely be put into place and employed here going forward. I think COVID exposed a lot of potential challenges or weaknesses that we all might have, and it almost, I think, created a catalyst to be better in this arena, to be proactive and to be thoughtful. And so some of the areas we're going to cover here specifically is, again, given that we had a situation, there are very few businesses in the world, when they look at their fixed costs and their variable costs, including payroll, that could sustain an 80 to 100% drop in volume and thus revenue. And so definite challenges created, and it's forced everyone, surgery centers, to take a look at every aspect of their business. So from cash on hand to opportunities to raise additional cash, the government, through the CARES Act and the PPP program, whether your bank, a lot of the CMS initiatives, which we'll go into depth here, created significant opportunity to increase your cash position. And then taking a look at your historical and what your projected patient volume and revenues are going to be so that you can manage your cash flow on a go-forward basis, and then evaluate during that whole time frame. And again, coming out of this too, your non-payroll expenses, your payroll expenses, and then we're going to get into this a little bit later in the presentation, future growth possibilities to provide a stronger and higher revenue growth number for your organization. So with that, I'm going to turn it to Matt, who's going to kind of dive into some of those points in more depth.
Yeah, thanks, Nader. The title of this slide is just so important and so relevant right now, and it's cash is king, and it's so important today, and to understand your exact cash position today, using your working capital, which is your current assets minus current liabilities, to determine where you stand cash-wise and what short-term debt obligations and accounts payable obligations you have as a cash outflow right now. And also you want to explore other opportunities to increase the cash right now and stockpile cash as much as you can. And what does that mean is basically there's different government programs that are out there that we'll go into more in depth today, but the CARES Act with the PPP loan was initiated to keep employees in all of their jobs and allowed you to get a loan that could be 100% forgiven if you use it for 60% of payroll costs and 40%, up to 40% of other rent, utilities, and other expenses from an 8 or 24-week period. So that has just been a huge help with a lot of companies around the nation with the PPP loan and the forgiveness piece. CMS had multiple initiatives. The CMS Advance allowed us to have 3 months of Medicare payments up front to help with that cash position today, and then recoup that on the back end 120 days from when we received that money. So you had almost a 4-month window as volume might have decreased, as Nader showed in previous slides, to have and stockpile some of that cash when volume was low and money wasn't coming in the door. And then there were some CMS grants that were awarded, and then Hospital Without Walls, Nader is going to go into here just shortly. But another important piece here is aggressively working your accounts receivable to accelerate cash and really understanding what are my historical collection rates when it comes back to accounts receivable. When is that cash actually coming in the door? And when volume might be a little less due to the pandemic or significantly less, really looking at that AR aging and saying what is really collectible and get very aggressive in trying to collect that. So Nader, I don't know if you want to jump into Hospitals Without Walls real quick.
Yeah, absolutely. And so as Matt mentioned, these are a lot of initiatives that have been very, very helpful for surgery centers. And the Hospital Without Walls is, I would argue, a little known initiative that CMS put forth that has fundamentally what it does is it allows, during this state of public health emergency, allows surgery centers to enroll as and act as a hospital, inpatient and or outpatient hospital. And what does that mean from a Medicare standpoint? It means that if there are cases that you're, for example, typically used to doing in your surgery center with your commercial payers, but you can't take because Medicare hasn't put it on the ASC approved list. For example, we're talking orthopedics, a total hip situation. We've got an elderly population. For the most part, what we're seeing, that population is not too inclined to go into a hospital right now with COVID floating around in the hospital setting. And it's providing an opportunity for surgery centers to be very patient-centric, provide a safe and comfortable option for patients to be able to get that type of a procedure done in a surgery center setting, and is giving surgery centers the opportunity to prove their capabilities and the outcomes that we all know are quite high and quite impressive, and be able to prove that and help the case with when lobbying to Medicare to allow more and more of these cases to be moved into an ASC setting. So if anyone has any questions about this, we're not going to do a whole conference on this right here. We could. It's very interesting and has some interesting legs to it. Doesn't fit for everybody, for sure, but it fits for some, and it certainly provides an opportunity for additional, revenue and volume in a way that is really helping, if done correctly, helping, again, patient safety and patient care right now. So with that, Matt, I'll turn it back to you.
Yeah. Okay, thanks, Nader. So moving on, establish revised revenue and collection projections. Due to the dramatic volume declines that we've seen, the key is to revise your revenue and collection and even financial projections, whatever you feel comfortable with, but daily, weekly, much more often than you probably were before the pandemic hit. And factor in the reduced volumes from March through June, which, as you can see right here, we have some percentages. March was pretty steady. The surgery centers didn't start closing till more the end of March or early April, but we saw this decline in cash collections of 35% in April, 50 to 75% in May, 30% in June, and we're expecting a 5 to 10% still decline of cash collections from where they were pre-COVID in July. So we're still not, through this pandemic yet. But if you take these numbers, it's important to note, if you take these numbers and if you average, let's just say $500,000 per month pre-COVID, then you would have lost approximately $700,000 in revenue over just these 4 months. And, the next question is, how do I manage? How do I stay open? What does that look like for me? And, so the next question here is, how do you manage losing all that cash? Well, we just discussed Hospital Without Walls and a couple of the PPP and other stimulus programs that are out there. I'm going to go into reducing expenses and what exactly that means and what you can do from a financial statement standpoint there. And then Nader's going to jump into generating new sources of revenue later on in the webinar.
Yeah, and Matt, just to jump in for a second, this is a tricky process, and again, we wanted to provide a framework for those to see if their numbers are kind of lining up from a cash collected standpoint each month relative to this. And I think the groups that were able to be more aggressive with their AR strategies during the downtime might have been able to keep that revenue drop closer to 50%, and and if not, it could drop by as much as 75%. So I think that is an important point here, to make. And then I also would say that and again, assuming a lot of groups, now I know groups that were affiliated with hospitals and had 50+% ownership would have been excluded from the PPP loan due to the affiliate rule. But let's assume you did get a loan and took advantage of some of these other things and manage this correctly. There's a reasonable chance that coming out of this, if your trajectory followed this revenue adjustment based on the volume adjustment, that you could come out of this in a stronger cash position and in a healthier financial position than you were going into it, which is pretty shocking to think that that's doable. But again, as we're diving through these, if these are steps you haven't been taking, I would encourage you to jump in and do them right now, because there is, like I said, there's really an opportunity to become quite financially healthy out of this and put you in a position to really capitalize on the growth opportunities that are going to be here on the other side of this.
So one thing you can do is reduce your non-payroll expenses. Evaluate all your opportunities to reduce or defer non-payroll expenses. And some of these are, rent, your mortgage, utilities, your debt, credit card payments, interest payments, insurance, taxes, some other equipment, some other ones that might not be listed here that you can probably cut today to really increase that cash would be travel and entertainment, meals, office supplies, office expenses that just aren't needed today. And it's important to note on this slide that the deferring of payments in a time of a pandemic. If you have an existing relationship with a vendor or your bank or lender, to call them and say, look, I need a 60 or 90 day. I know that the credit card companies were issuing pretty standard 60-day deferments of payments with no penalties or interest, and I know that the SBA came in and said you don't have to make, if you have an existing SBA loan, you don't have to make payments for 6 months. So working with your banks and your suppliers and saying, look, I need a 60, 90-day deferment, whatever that is, but then it's also important to not just to get that deferment, it's also important to say, I need to set up a payment plan on the back end so you don't have to pay that entire length of the deferment, one lump sum cash payment, and you're kind of spreading it over some more months as that volume continues to come back and your cash continues to come back as well. And then the second piece of this is to evaluate your payroll costs. So figure out your hourly versus your salary employees. And, if you got the PPP loan, it might have allowed you to retain some or even all of your employees. Other options there are to keep the staff with no changes, or if you weren't able to do that because you didn't get the PPP loan or cash was short, is evaluate it and say, what staff can I keep with reducing maybe the hours of some employees, or reducing the salaries of some of my key people. But be careful with the salary piece, because if you do reduce it by 25%, part of that PPP loan forgiveness, it could be affected by that. So just keep that in mind. Another option that we're seeing a lot of out there is furloughing, which you don't have to pay their wages, but the benefits do remain for the employee. So it's a great option before having to lay someone off. And if it's bad enough, then, layoffs are that last kind of type option. But, this is really important to strike that delicate balance between your loan forgiveness, if you got the PPP loan, and preserving cash, because you want as much cash. Like we said, cash is king right now. So you want to preserve as much cash, but there's a fine line. So you want to strengthen your organization, as Nader just alluded to, as some organizations will actually come out of this stronger than before they went in the pandemic, which is crazy to think about. But you don't want to lose sight of the company you built and the company culture around that, and what goes with that is employee morale. So, you really don't lose focus of the culture, employees, the morale around all of this, and do what's right for your company. Nader?
We just one point, Matt, there quickly, is that
okay, yeah, sure.
We don't want to. I think it's very important to understand that you should be able to get, now with the changes in the PPP program, that you should be able to get the entire loan forgiven. You have an 8-week period, which is going to be tight for a lot of people, and now they've provided this 24-week period. So get with your accountants or your attorneys or your internal team, however you're managing it. But I would really look at it with a goal and an objective of getting 100% of it forgiven, because there's enough opportunity, enough structure within that you should be able to. So with that, kind of talk through what has happened, COVID and its impact on surgery centers in the short term. What are some financial strategies that you could take to really strengthen yourself and manage through this? And now the big picture is, and the big question really here is, what does the future hold for surgery centers? And it is an interesting time for sure. And right now, really before this, there was a lot of positive trends that were driving an increase in growth in surgery centers. And I believe these trends are only going to be, continue and even be strengthened post this. But first and foremost, one of the things we talk about is it's rare in life to get a win-win-win situation. But this opportunity, working and operating and doing procedures in a surgery center, provides a win for the patient, a win for the surgeons, and a win for the payers and employers. And from a patient standpoint, first of all, lower cost structure great outcomes, safe environment, very convenient, personalized attention. From a surgeon perspective, you're able to manage your staff, recruit who you want, bring in the technology you want that fits, and to go easier to schedule, much easier to get a surgery into an ASC than into the hospital. And also, very importantly, you become and have the opportunity to become an owner in the business. And so there's control and financial upside that comes with that. And from a payer and employer standpoint, it's pretty obvious. You're looking at, for many procedures that we analyze, payments are anywhere from 50 to 100% more when performed in a hospital setting than performed in an ASC. So significant dollar savings for all payers, including Medicare. And so there's going to be, continued movement and incentive from the payer population to move those cases. So really powerful from that standpoint. And then some other macro trends. You've got an aging patient population, which is driving just in general more surgeries and requiring more surgeries. And combining that with the technological advancements that are allowing surgery centers to now be able to handle these types of surgeries for that elderly population as well, with great safety and outcomes. And CMS continues to push more and more cases. For example, this year, total knees were approved in ASCs. Many people believe total hips and shoulders are coming. A lot of spine procedures, cardio procedures, and other specialties. Every year there's an increase of many procedures and significant kind of higher acuity type procedures that are moving to surgery centers. And finally, as it relates to COVID, this is really, I think, highlighting for the first time, I think most of us in the industry have understood and known the strength of surgery centers and that they're wonderful places to have your procedures and to be taken care of and a great place to operate within. But the general public may have not been as dialed in and focused to some of the issues like the infection rates, but possibly in hospitals, or just in general, the idea right now of COVID specifically being in hospitals. So we're seeing from a patient perspective, a bigger driver than ever before when given the choice, wanting to have their procedures done in a surgery center rather than in a hospital. And so that is very significant, and I think it's going to further accelerate the growth of the industry. And so to that point, just kind of quickly here to hit on some of the growth numbers. In 2005, about 32% of surgeries were outpatient surgeries were done in ASCs, and today it's north of, until in 2017, it's north of 50%, and today it's closer to 60%. And Bain recently did a detailed study outlining the growth rates of the industry, and historically it had grown at a 3 to 4% clip. So the broader ASC industry is projected to grow at 7% now. But there are certain specialties, ortho, cardio, spine, for example. There are many others, but those three in particular are rapid growth. We'll spend a little bit more time on those on the next couple slides. But if you look at this bar graph over here to the right, it's interesting. You're seeing a 54% growth in revenue in surgery centers from 2015 to 2021. What's interesting is if you look at the volume growth, the volume has grown by 35%. Which is still significant, but revenue is growing by 54%. And the reason for that distinction in those two numbers is that these bigger ticket items, more complex cases, are moving rapidly over to the surgery center setting that has historically been in the inpatient or hospital outpatient environment. So I'd mentioned the ortho spine cardiology growth, and just quickly here, I think these graphs tell the tale. So while the overall industry is growing by 7%, which is significant and faster than really any other area in healthcare, orthopedics is growing just from 28 to 2021 growing by 31%, and spine in that time frame, so in a 3-year time frame, spine is going to grow by 200% and cardiology by 230%. So these are some things that if you are performing these kinds of cases in surgery centers, you've got a lot of opportunity to continue building and growing it. And if you are a multi-specialty center and aren't in all 3 of these, or 1 or 2 or 3 of them, there are opportunities here for you to think about and strategize as to whether it maybe makes sense or not for your center. But certainly there's significant opportunity here. Now, just a couple examples here on these next few slides. There are, as I mentioned, here's just a sampling and an example of some of the orthopedic procedures and some of the reimbursement for these kinds of procedures. We won't go one by one, but point here is total knees, $8,600 for Medicare, and most of the commercial payers are going to be, low 12 to 18, 20. Again, depends on your contract, depends on, where you are, but a lot of opportunity for these big ticket items. Total wrist, we mentioned hips and shoulders that are being performed on a commercial basis, but not by Medicare right now. So anyways, a lot of interesting things going on in orthopedics for sure, with the total joint movement probably at the top of that list. Flipping to the next slide on spine, spine, what's happening here? Spinal fusions now moving to surgery centers. Cervical disc replacements, those types of procedures, again, big ticket items, complex, and they've shown great results. And then from a cardiology standpoint, similar, you're seeing angioplasties, stents, defibrillators, those types of cases are moving, and again, important, complex, and really these specialties, I just wanted to highlight them. If anyone, after the fact has questions for us in other specialties or wants more details, certainly feel free to email us. Obviously, we could do slides like this for numerous specialties, and you'll see something similar with almost all of them, but we wanted to just highlight it so you have this as kind of a framework and a thought process going forward. So with that being in mind, again, just to kind of recap, we've talked about the challenges in the industry. We've then talked about how to manage through it financially, and then some of the growth trends. And one of the things, by the way, I want to hit on, I forgot to mention on one of these slides, just breaking today, for example, Texas, the Texas governor issued an order essentially stopping elective surgeries from being performed in a handful of counties, but for hospitals specifically. So I think it's just another point that talks about the opportunities immediately right now for surgery centers. If you're in those counties and the surgeons can't take any of their cases to the hospital and they can take them to the ASC, it's another driver of growth from a surgery center perspective, from recruiting other surgeons and physicians, giving them the opportunity to learn and understand your environment. And so, keep an eye out for that. We've seen some possible discussion in some other states, parts of California, et cetera, where some of that type of legislation may be coming, on a state-by-state basis. So again, keep an eye on that. So anyway, so with that being said, we've just talked about now trends in the market to be able to grow your business. And we've listed here kind of 7 critical steps that you should be thinking about to help you pursue those opportunities and to build and grow. And so number 1, if you're, for example, bringing spinal fusions over, or you're starting a total joints program, step 1 is making sure that you develop kind of a best practice clinical protocol with your surgeons. There are a lot of organizations, again, we're happy to help people, point people in the right direction. in these areas if they have any questions, but really making sure that you've established that from the standpoint of, patient selection, the quality, the process, the staffing, the technology, and all of those steps in place. So you've developed that, and even a post-care, strong protocols with respect to your surgery center. Secondly, having a really strong patient outreach programs, kind of your marketing initiative, working with your surgeons and their surgical practices, their offices, to make sure that they have the proper information so you can educate the patients. We see a lot of the times, someone might just turn to the patient and say, would you like to have this done in a surgery center or in a hospital, without any really information to guide that. And most people don't know what are the questions they should be asking. So whether you have a brochure, whether you have some information on what it would be like to have, a procedure done in a surgery center. But again, working with that and developing, potentially other marketing initiatives, important to sort of build that process so you have the patients. Well, if you're doing those things, what you clearly need to do too, assuming you are an in-network center, is you have to make sure that your managed care contracts, that you've negotiated them to include those types of procedures, again, whether it's a fusion or angioplasty or a total knee, that your contracts address that you've brought all the right data to the table so that you establish strong contracts, you get the rates that you need to incentivize you to do these and to be able to make some money in the process. And then now that you have those pieces in place, it's really important. The business side of this is so critical because you are going to invest a lot of time and money. Your implants are expensive, and so you've got to have really strong front-end processes from, your scheduling, your registration, your pre-auth, your verification, and kind of benefits verification process. All of those things have to be done right. If not done right, you may take patients that don't have that as a covered benefit, or you didn't get a pre-auth that required it, and now you've done a procedure that should have paid, north of $10,000, and you're not going to get paid. So really important to get that part right. Also, as I mentioned, financial counseling and patient education. So having a process where you're educating and being able to talk to patients, explain the scenario, explain their financial obligation, making sure you have a good process to collect from the patients too, because they are, again, these are big ticket items. So not collecting from the patient today is financially very, very harmful for surgery centers. It's too big a percentage of the overall payment today to pass on that. And then with all that in place, you've got to make sure you've got experienced and skilled people to be able to code all of these claims correctly and thoughtfully to be compliant and to maximize your revenue. Make sure that you're posting the payments correctly, flagging if someone didn't pay, for example, the implant component of the claim, just paid the procedure, that you're not writing that off. Your AR team knows how to pursue it, how to follow up, has a good denial management strategy in place, and has a good appeals process to make sure that you've got every aspect of it covered. And then finally, the only real way to do this is to have really strong analytics wrapped around all of this, so that you can have really a full and complete picture of what your numbers look like, what your business looks like, and be able to make good and informed decisions. So really, before we jump to questions, just kind of bringing this back all the way around. Dramatic impact from COVID, really strong strategic financial management, so important over the last few months and going forward. We don't know what's going to happen. We don't know exactly what's going to happen with volumes. We don't know if there will be a second wave, but I think it was a good lesson for everybody to really strengthen that part of their business. As we talked about, the market really is rebounding nicely and is positioned for significant growth. And as we kind of talked about, it's very ironic, but COVID-19 is really accelerating and going to accelerate the growth of our marketplace. And so with that in mind, so important to manage financially through this, because if you're in a strong cash position, you can invest in your business and go after and pursue some of these really neat growth opportunities that exist within the market, whether it's, again, building out, just continuing to build out what you have and how you're doing it, recruit additional surgeons, whether it's pursuing additional interesting high growth specialties like the spine, cardio, ortho, et cetera. But it's a time to be thoughtful. It's going to be a time where the real leaders in the industry are going to advance and really move forward while others have been potentially retreating. And so, in short, we're very bullish on the surgery center market, its opportunities, and, what this will look like as we get to the other side of the crisis, which, knock on wood, we feel like we're very, very close to it, if not already there. So with that, would love to kind of turn it over to the Q&A process.
Right. Thank you again, Nader and Matt, for that excellent presentation. We'll now kick off today's question and answer session. I see a couple questions coming in already, but just a reminder, if anybody does have any questions they'd like answered, just to submit them into the Q&A box on your screen, and we'll try to get through as many as we have time for. We've got one audience member has a question coming in here, would like to know, when ASCs are establishing additional streams of revenue, what are the top 2 to 3 areas they should focus on?
So I think we hit on this. It's a difficult question to answer because without knowing the profile of the center. So if someone is, a single specialty ophthalmology group, then that might be a different answer, and it might not make as much sense to pursue orthopedics unless they have relationships, for example, there. So it's difficult to answer, but I think in general, I would say look at the opportunities you have within your relationship base of surgeons, within your existing surgeons in the center, within your specialties. Are there innovative procedures happening, or is there technology that can get utilized? What are areas that can drive, additional growth and be profitable for you? And so happy to, again, offline answer that in a little bit more, specifics if I know the profile of the group. But I would say those are the things you want to be looking at, and look at some trends and opportunities and pursue those, as opposed to pursuing things that maybe are, moving in a different direction.
Gotcha. And another audience member question is just coming in. Is the ASC reimbursed at hospital rates?
Is it ASC reimbursed? No. That's actually, well, I don't know if that question is in general or if it was specific to hospital without walls. If it was a hospital without walls question, then the ASC would get paid hospital rates by Medicare, so Medicare hospital rates for the Medicare patients, and it would continue to operate as an ASC for its commercial cases. But if you're talking about in general, typically ASC reimbursement is about 55 to 60% of what you would get in a hospital.
Gotcha. Thanks for clarifying that. Next audience member question coming in. Can you explain the PPP forgiveness process since it has changed so many times? Do you recommend using the 8-week or 24-week period for forgiveness?
Matt, I don't know if you want to jump in on that one.
Yeah, I mean, it's a lot, but yes. So it depends on your certain situation. So if you feel like you can get 100% of the loan forgiven in that 8-week period, if your lender is ready, then I would recommend going ahead and getting that debt off your book and getting books and giving it forgiven. But to Nader's point earlier, they made it very hard to not get it all forgiven, extending it to that 24-week period. I think some areas to keep in mind are making sure that your head count is at the right level because that is one area. If your headcount reduced during the time frame and it's not back to a certain level, then the forgiveness amount will decrease. So I think you have to look at your employee count, whether or not you've spent that money and you're keeping in the right parameters of the 60%, up to 60%, or more than 60% of payroll costs, or up to 40% of the rent and utilities along that. But those are the big items to look at when you're looking at the PPP loan forgiveness. So employee count, is it for payroll costs, and how much am I spending on the rent and utilities, which is only could be 40% of your total loan.
That's great. Thanks for sharing your insight there, Matt. We've got another question coming in about the hospital without walls process. One audience member would like to know, how long did the hospital without walls process take?
It's a very good question. It depends really on how well equipped you are for it, because there are a decent number of steps you have to take. So I would say the fastest from kind of saying go to being ready to submit claims is probably 3 to 4 weeks to get those claims out the door, and that's assuming you are buttoned up with, each step of everything you need to do, from submitting your application to, everything you need to do from a coding, billing, revenue cycle standpoint, and technology standpoint with the software systems and such. So there's a decent amount of work. So I would say 3 to 4 weeks on the fastest time frame if you're really prepared and ready and knowledgeable, and if not, then it could take longer, and you need a team that understands kind of the rules, so that you're making sure from a reimbursement standpoint you're pursuing it correctly and getting your money.
Super helpful. One audience member asks, do you recommend negotiating rates based on a markup of Medicare? Do you see much success with individual procedure carve-outs?
So did you say, do we recommend negotiating rates on a multiple of Medicare? Was that the question?
Yeah. Do you recommend negotiating rates based on a markup of Medicare?
No. I guess the short answer is no. I mean, there's a lot of different variables, but fundamentally, you can always back into that to get a sense as to where you are, but I would not recommend that being a thought process that you utilize. You really need to look at the business, the marketplace you operate within. What does that competitive landscape look like? What's your cost structure? And make all of those arguments. But, staying as far away from kind of Medicare rates and that as a discussion point is probably recommended.
Gotcha. We've got another question coming in based on COVID's effect on the economy. One audience member asks, given the effect that COVID-19 has had on the economy, what are suggestions for collecting from patients and reducing bad debt?
Yeah, that's a great question. It's been interesting. The data we've seen has indicated to us that patient collections during this time frame actually hasn't dropped. So I think the key is having a good process in place, good disposition, obviously with your patients. They are your clients in a sense, and but also communicating with them that you guys also are a business that needs to be able to, get paid for the services you've rendered and such. And if you need to provide, payment plans or financing options for people, I think those are all, viable options that should be pursued. But I don't believe that surgery centers should take on the role of a bank, and certainly not a bank that is forgiving all of those payments either, because your business just won't be able to sustain itself if walking away from what could be 20% of your revenue. But at the same time, I think it's important to be, to have empathy during this, time frame for people and take each case individually. And some people are going to be in a tougher spot to be able to pay than others. And I think, using some judgment and, like I said, empathy in that process is important.
Thanks for clarifying that. Now, we've got another audience member asking a question about patient volumes. specifically referring to the statistic that you referred to earlier. On the volume trends that you showed earlier, 90% of pre-COVID levels in June. What portion of this backlog versus new patients scheduled? Do you expect to see a dip once this backlog clears out?
You know, that's a good question, and I think one that everyone has. It's difficult to answer. I think that's certainly a possibility that you could have, this backlog that is, bumping volumes a little bit. But I think at the same time, I think that, for the most part, it seems like people are getting a little bit more comfortable with leaving the house, going out, moving on with life and such. So we don't know if there will be, again, a second wave. There's certainly, some good news out there and there's some bad news out there. So difficult to answer, but I would guess there won't be a major drop from there. If anything, I would suspect that would be maybe within a 5% range.
Gotcha. And I think we've got time for about 2 or 3 more questions. We're seeing quite a bit of interest in the Hospital Without Walls program. One audience member asks, we're a strictly ortho ASC and we do total joints. Do you think it is worth it at this point to look into the Hospital Without Walls program?
Yes. Yes, absolutely. So I've given the example of, again, I think it depends on your market, your profile, who your patients are. But if your surgeons are handling a lot of certain Medicare type cases in an hospital outpatient setting, because that's where you have to do them, but you're able to perform those cases in your ASC, and like I said, just take a hip or a shoulder, a total hip or shoulder replacement. A lot of these people, again, they're putting those surgeries off. They need them. It's gonna create a deterioration in their medical, their medical condition. If they don't get it, they need it for a reason. And if they delay that by 3 months, 6 months, a year, that can cause other health problems down the line. And so if you can create a scenario where you can handle those types of procedures in an ASC, taking care of your patients, then I don't see why someone wouldn't want to do that.
All right. The next question from another audience member coming in. How long will financing vendors and others allow you to defer payments?
Matt?
I can take that, Nader. So I've had a lot of experience with this through the pandemic, and what I've seen, I kind of touched on it earlier, the SBA granted an automatic 3 months, now 6 months, if you have an existing SBA loan. So I think your lender is pretty comfortable in that 90-day to 6-month range. I've seen most suppliers, it does depend on your relationship with them, but most of them were good for about a 90-day period, and most of the major credit card companies were more around that 60-day mark. But again, it is going to depend on your relationship, how much you spend with them, multiple factors that go into that. But that's what I've seen.
All right, thank you. And final question to either you, Matt, or Nader. What percentage of ASCs completely closed down during COVID?
So, look, we have, a snapshot of the market, but I feel like probably the number is about 70 to 75% shut down, and the others dramatically scaled back. I don't think anyone kept going at 100% of volume. I think everyone was respectful of the ask in the market to, preserve PPE and from a staffing standpoint and all of those things. But I would say that's about the split that we saw, about 70%.
All right, thank you so much. And Nader and Matt, any final thoughts before we wrap up today's webinar?
No,
thank you for joining, Nader.
Yeah, I think just in general, I think we hit on a lot of points here. If anyone has, I know there's some questions. I apologize we didn't get to. I think we've run out of time here. We will come back to you either in writing or if it's more in depth than that, possibly schedule a call. If anyone has any questions or wants any additional information, please let us know. It's a really challenging time, but we are super excited about this market. We love it, and we want to be able to help everyone manage through this to the best of their abilities, and like I said, take advantage of the opportunities, which I think are going to be plentiful in the near future and the distant future as well. So exciting times, and like I said, let us know if you have any questions. I think we on this slide had a email address and a telephone number. You could just use that and shoot it to us, and we will get back to you.
Fantastic. Well, thanks again to Nader and Matt for that excellent presentation and the Q&A session, and also to National Medical Billing Services for sponsoring today's webinar. Enjoy the rest of your day, and we look forward to having you join us for future webinars.
Great. Thank you.